Good evening, everyone. Guess we'll wait around and see if anyone shows up. If there's anyone in the chat, if you could just um, let me know what uh, charts or ticker symbols you want to take a look at tonight, and I'll start building my list. Also, it's not a bad idea to speak. You can always say hello if you like, so I know who we have. Hey, Erica, how you doing? And who me? I've got you. Thanks for joining the chat, Erica. Let's start with XRP. We're just gonna dive right into it because if we don't get a really good turnout, we're just gonna run through this really quickly and get everything done. Like I said, I appreciate you guys joining me tonight. All right, so XRP, let's take a look. It's always top-down analysis whenever you want to take a look at a chart. One thing that's interesting about all cryptocurrency charts, when you start on a monthly chart, it typically only has one direction or the other because most of them are so new. This one's actually had polarity change in different direction a couple times on the monthly chart, which is interesting. So the last polarity change on this chart from my viewpoint looks to have been to the downside. I guess I could draw the line to double confirm that. Okay. Well, actually, we're kind of breaking up. So this is good, and this is I like to trade one wave at a time, and this is a perfect example of kind of what I talk about a lot. So the move here started basically from inception. This is July of 2017, and it made its high in January. All right, so this doesn't look right. Is my fib broken? Let's redraw that. Those numbers look really weird. We might be having some technical difficulties with the fib here. It's probably because that's not a Fibonacci. All right, let's try again one more time, guys. Sorry about that. Okay, that is a fib. All right, I don't know what's going on here. Let me check some settings on the fib. I'm not sure what's going on. Let me try and draw it on a smaller time frame. Let's see if it's doing the same thing. Bear with me here. That's very strange. Let me reset this. Let's see if we can. Sorry about this, technical difficulties. It's the first time I've actually ever experienced this problem. But sometimes when you exit out of Trading View and come back in, it'll act right. So hopefully that'll fix it. Come on. All right, still not working. All right, I don't want to do this manually, but I guess we could. So we're gonna work around it. So let me show you something. Need a measuring tool. Bear with me. All right, so this right here, this distance here was I don't exactly know what that number is. This is going to be extremely difficult. Basically what we're looking for is retracements. All right, so price made a strong move from the beginning of July all the way up here to January 18th. All right, and there's a retracement back, and this area here is about a 61% retracement. That's just me eyeballing it. And this is about a 78% retracement, and this is typically the spot where markets turn. So price kind of died there and has been, you know, it put in this bottom. So 1-2 months it basically couldn't get any lower. It came down and did a retest, and if you look at where we're at now, this month is on the other side of this downward sloping line, and this would be a supply line per time to mark, and it looks as though we're going to break this trend down here, and it's happening at this level. So if I was going to buy XRP long term, I'm not giving any financial advice on these videos, okay? But if I was going to buy XRP, this is the spot where I look to buy. Bigger picture, longer term, because this is the zone where price normally runs out of steam, and you're going to get a reversal. Now you'll meet some resistance coming back up, because it's always hard to make new highs, and there's always, when you're dealing with coins or any asset really, there's always the fundamental aspect too. What kind of, you know, fundamental factors are you dealing with that could cause the price to tank or moon? But barring any outside fundamentals, and just from a technical perspective, there definitely should be some upside, you know, from this range to, you know, somewhere in this range here. So if you size your position, you know, accordingly, then there should be some room. And then if we go down to the weekly chart, that should start to bear out. And here's where it's bearing out. Like, you had failure here, it's retested, and now you're starting to get green candles or blue candles outside of this polarity line, saying that the market's starting to turn up. And then on the daily chart, you see it there even more pronounced. I don't know what is going on. The fib tool has never not worked. It's very concerning. So, yeah, here's an example that, you know, once the polarity has kind of changed, actually, this would be a better example on a daily chart. Once the polarity has kind of changed and gone to up, it's reached this area here, which is where markets typically turn. And then also on a daily chart, you've got kind of a polarity change here. So if you're going to buy, as a matter of fact, if I was looking at this and I was trading this, my entry would have been right here on this red candle right here. And I would actually already be out of this trade. I would have bought here, and my exit would have been somewhere here. And the reason for that is this fib line, these fib lines were already here, this support area, and you've got a trend line break going to the upside off of the bounce. So I would have looked to start to get short on this candle. And when the first time it came back 78.6% right here, I probably would have jumped in, and my target would have been somewhere around here with a 2-to-1 risk reward ratio, and I would have won that trade. See, I trade one motion at a time, and you could trade the same chart multiple times. You know, like there's a buy signal here and there's a buy signal here. So there's two actual trades on this chart. One right here, one right here. So both those trades would have been winners. So But yeah, if I was gonna buy it, I'd start looking for buy opportunities now on it. Long term, I don't know. You have to know the fundamentals. Bitcoin, that's an easy one. I follow Bitcoin pretty heavy. I'm not trading it right now. I'm just a buyer of Bitcoin because I think Bitcoin is going to inversely correlate to the stock market. So as our market goes down, Bitcoin should go up, is what I'm thinking. And long term, I made a video about this a few weeks ago. Long term, I think that as our market goes into a recession or a pullback, I think Bitcoin is going to become one of the assets that the money flees into, a la gold, bonds, and emerging markets. Typically, because stock markets, when the markets start going down, almost anything related to the market tends to fall with it, especially in a recession. So a lot of money leaves the market fleeing for safety, and I think Bitcoin is going to be the recipient of that. So as far as trading it, like, from the chart, let's see. Polarity is still down on Bitcoin for right now. So if I'm looking at a monthly chart, we're going to have some resistance at the 6809 and 6004 level. So here and here on a monthly level. So then we drop down to a weekly chart. The polarity on the weekly chart is up. So it's been going up for a few weeks. So if I was trading this right now, I find it in the middle of the range. So I would probably look for a buy opportunity at the 35 to 7,500 range. I'd look for something. I wouldn't buy it here. This is a 50% full pullback, which could indicate a stronger upward move. And what happens when that happens is you just kind of miss it. The way that I swing trade, you want to put probability on your side. So the longer something goes in the opposite direction of what you want to do, like if it's going down and you want to buy it, you want it to go as far down as possible before you buy it. And if you're going to sell something, you want it to go as far up before you sell it. And the way you can gauge that is by using Fibonacci to tell you how big the retracement is. So once you identify the main direction, like in this instance, on a weekly chart, the direction is up. Now, bigger picture, long term, it's been down. But on a weekly chart, the current direction is up. So I would look for a buy opportunity. Well, you want it to come as far back since the last time it made like a swing low on a weekly chart. And in this case, that would be what these blue lines represent. Right now, you're kind of in the middle of the zone, and this is a 50% retracement. I mean, I could put the fib on there, assuming that it's going to work, and I'm pretty sure it's gonna pan out to be a 50% retracement, which is not a bad place to buy. It's just it's not as reliable, big picture. So here's 50%, and there's that. Here's 61%. Somewhere in this range would probably be a better place, but it got pretty close. So. And polarity is up on a daily chart. So, you could let it pull back on this candle and buy it up. You could buy it here, but you got a risk reward thing to deal with there. You always want to weigh risk reward. Like if say you bought it here, where do you put your stop? So you put your stop back here. Your what is that? $217 stop loss, but $217 going forward, 1-to-1 risk reward puts you up here. And that's not really good, because that means you're trying to predict that the market's going to make a new high. And I mean, it may, but I don't like to predict what's going to happen next. You kind of want to play odds. And so if it pulled back a little bit and you could get a smaller stop loss, then you'd have more room on the upside to get out of it with a favorable risk reward ratio, 1-to-1, like 2-to-1, 3-to-1, something like that. And then it's a more favorable trade. So every time you take a trade, it's always risk reward that you want to weigh, So I think the direction for Bitcoin's up. Intraday, there's some resistance right here. You've got this doji and this kind of inverted hammer. So you may, like intraday, you may get some pressure going back down for a buy back up. But I definitely look for a buying opportunity. If I was day trading, it's probably the polarity is probably starting to switch to down. Not quite yet, but yeah. I'd be looking for a buy on Bitcoin. Now, me personally, I'm buying Bitcoin as much as I can for the long-term hold because I think Bitcoin is going to moon in the next 2 years. And I mean really, really big upside is what I think. So that's what I got on Bitcoin. How much in the bull run? I don't really know. I mean, I really hate to put those kind of projections out there because to be perfectly honest, I'm not a fundamentalist. I watch charts. So, but just from my analysis of it. All right, let's back out and look at it, bigger picture. And to do this, I have to use SPY. All right, so you kind of have to wonder, what does SPY have to do with this? Well, I'll show you. If you look at this giant run that we had that started since '09 up in the stock market, I think that this last 20% drop that we have could be the beginning of the recession move or the correction that this market needs from this gigantic run up. All right, so if you were to put a trend line on this move, I mean, everyone could draw it different. That's why I use time to mark trend lines, because they're pretty objective. But if you look at this trend line, if you use this one, we close on the other side of it and we punched right through it. So it's kind of, you don't know what's going to happen next. But whenever this market starts to collapse, I think Bitcoin is going to inversely correlate to it, because cryptocurrency is an option now for the market that the market didn't have the last time we had a major recession like this. And cryptos are, over $100 billion market cap. It's a viable asset for a lot of people. So safety plays in when the market is going down is not going to be relegated to only bonds and only, certain safety type stocks, or, emerging market plays, or stuff that's off exchange, real estate, things like that. Because I think all that stuff is going to be affected by the next downturn. So I think cryptos are going to be the big winner. And I think all the top cryptos in the space are going to see tremendous growth as our market tanks. Now, I could be wrong about the market turning here on SPY, but if it does, I think it's going to inversely correlate directly to Bitcoin. The further down it goes, the higher Bitcoin is going to go. Now, if you go back to when Bitcoin mooned last year, it didn't have institutional stock market money behind the push, and we got it up to $20,000. So with a proposed ETF under advisement now, and they're deliberating on that, combined with the flee to safety or flee to other assets that have growth potential, that's going to happen when the stock market starts to turn. And then, Bitcoin's a limited commodity. I think the ceiling for Bitcoin is larger than gold, which is, I think gold is around 9 trillion market cap. So I think Bitcoin's ultimate market cap could be anywhere from $15 to $25 trillion. And I might be lowballing it there because it does have more usability as an actual currency for trading. Not for trading, but for actual exchange, currency exchange. So I'm saying a lot to say, I think ultimately Bitcoin's cap is over $1 million per coin. But this next bull run, I don't want to project a number, but I think it's above 20,000. I think every time that this happens, we put in a new baseline. Remember, Bitcoin went from $5 to like $1,000, and then all the way back down to $40, and then $100, and then up to $2,000, and then down to $1,000, and then we went to 20,000 last time, and we hovered at 5,000 to 6,000 for months, and we just recently dropped down to 3,000 or 4,000, and now it's kind of going back up. So I think that the next floor that we put in should be over 10 or 15,000 when it pulls back again, and I think each pullback going forward should be less violent than the one before it. We're a long way from stabilization, but because our adoption rate is probably still under 2%, but long term over $1 million, short term next bull run, and through the recession that typically lasts about a year and a half, I wouldn't be surprised if it got up to $60,000, $70,000, $80,000. I wouldn't be surprised. Now, where it falls back from there, it could level off at 20. I don't know. Don't get me to lying to you on this. I'm just making those numbers up, but I think it's going to moon for as long as the recession lasts, and we got to 20,000 last time in the middle of a bull run in our stock market. So the people that were putting money in Bitcoin are more enthusiasts and early adopters as opposed to institutional money. And I think when institutional money gets involved in this scenario, it's going to push it a whole lot further, a whole lot faster, and it's going to be a prolonged push because our market's going to be in a recession. And I could be wrong about that happening right here, but the recession ultimately is coming. You can't go straight up for 10 straight years and and just keep adding years and years to that. At some point, there's going to be a pullback, and when that happens, I think Bitcoin's going to be the recipient. So that was a really, really, really long explanation, but that's what I think as far as Bitcoin. So I think Bitcoin is inversely correlated to SPY. And that's what I think. And I don't think the correlation is really that strong yet. I think it will be once our recession begins. That's my thoughts. And as far as keeping your crypto, I would definitely recommend as many things that are offline as possible, because there's more criminals online than there are walking around your neighborhood. So just by the simple fact that you're keeping the crypto offline and secured that way, you're way less likely to have someone, try and take your Bitcoin or your crypto from your house than you are from some type of online access. And people have shown over the years, encrypted, non-encrypted, people find a way online. So you're just exposing yourself to more risk storing it online. Get your keys, print them. I would even say go as far as, depending on how much you're investing, I would go as far as to say put your keys and maybe your nano or whatever in a safety deposit box in a bank. That's my play. And just do it like that if you're storing anything of value. So I have a Trezor, and there's Bitcoin on there, and you can put it in a safety deposit at the bank, and it's like keeping it in the bank. And then you can keep your keys, and you can keep paper copies of your money too. There's ways to create that. So anything that's offline, I think, is better. But I mean, you become completely responsible for your own money. You become the bank that way. So if you lose things or you mishandle it or mismanage it, you're going to lose it, and it's going to be all your fault. You don't have anybody to blame. But that's the new age that we're in. I think it would be better to keep it offline. As far as market crash, let's pull SPY up again. Looking at SPY, so there's a lot of different ways you can view this. So this is a really long run, 10 years. This is a major correction. Most of the time when you get a 20% correction, that's the start of a bear market. So then you look at the size of the run, and bear markets typically last about a year or two, year and a half. Okay, so I kind of tried to extrapolate that, and that's how I came up with the red lines that are down here. This is potentially the zone where I could see the market crashing too, and this could potentially be the leg. But it's kind of unnerving to see the response from the drop that we had in September that ended basically on the 24th of December. But then to look at the pullback, markets typically do not pull this far back and then go and make a new low immediately. So I thought we would get a regular pullback here, hit support, that would push it back up, sellers would re-enter, and then we would continue down, and then the run would be on. The problem I have with this leg here with no correction or no type of retest is now we're going to get the retest, but this level of a bull run puts a lot of buyers down here that believe that the market's going up to make new highs, and it's going to be a fight here. So I think some of the macroeconomics that we have in play, specifically the deal with China, a lot of it's going to hinge on that, and then what the Fed does beyond that, because the bullish bearish cycle is influenced by the interest rates. I mean, it's probably the single thing that can affect the market direction. And if this thing gets too bullish, they're going to go back to raising rates. And if we don't reach a new high, I don't know. There's just a lot of variables. So I was more inclined to think it was going to start this year. And you never know you're in it until you're already in it. So I was thinking that this is it, that we're already in it. We just don't know it yet because of this correction that this downward move that we had here that broke polarity. But this up move has me thinking there's going to be a lot of buyers here. So it could prolong the time frame. Whereas we may have got there earlier. I think something like this is going to happen. So it's going to come down, and all the buyers are going to come back in. Now remember, from this move down here, the people that are bearish that think this was just a correction or a retracement and it's going to continue down, they're going to be waiting to sell it here, at this point. So they're going to sell it back down. But then the buyers that bought it here are going to think that this move down is just, the second leg of this move that's going up. So they're going to be there to buy it again here. And then that's how you get consolidation. And it just squeezes itself into a small little section, and then it explodes one way or the other. I kind of explained that on the video I did today, and this is a very common thing. So which direction it's ultimately going to go, I don't know. I would be more inclined to think that it's going to go down because we're at an end of a 10-year run. The global economy and our economy is slowing. Guidance has been lowered for all sectors across the market for the most part. Tech is waning. We've got an election next year, and the blame game is going to start to come out. Like, there's just so many different things that are going on that make me think it's going to be a bearish move. But my history on the charts, I don't like this V correction this far back. It just doesn't bode well. So I think if nothing else, it's pushed the fall a little further down the road, unless something crazy happens. We could find out that China, the tariff thing doesn't get solved properly, and then it could tank or moon one way or the other. So I'm not sure, but if I had to guess, I would say sometime later this year, maybe early next year. Let's see. Do we have any other charts you guys want to pull up, take a look at? Stock market, commodity, currency, crypto, doesn't matter. We can look at anything. Cryptocurrency, for me, I really only follow Bitcoin right now, really. Because since, it's kind of illegal for America, I'm in America, so since it's been illegal for us pretty much to get involved in the ICOs, with the exponential growth that you get from ICOs not being on the table, I'm not really following a lot of them too much. There's 2 or 3 that I'm watching, but I don't know enough about them to fundamental wise to speak on them. So what I know is Bitcoin is kind of the oldest, and it's probably the slowest of all the major cryptos. But I think it has a really good use case to replace gold because there's confidence in the minds of the people that have already adopted it, and it has a name, and you don't have to explain what is Bitcoin anymore, which is a huge step. So I like Bitcoin. I think anything in the top 5 or 6 cryptocurrencies, maybe the top 10, is going to benefit from our recession. So any of them that you think has a really good use case and a competitive advantage in the market, because I mean, all indices or all markets are based on what is your competitive advantage in a business. Like Ethereum has an advantage because it's the base platform for a lot of the other cryptos, and it's old like Bitcoin, so it's going to be a trusted name. So Ripple's up there. I mean, there's a lot. I don't want to start getting into naming all of them, but if you do the research and find that it has some type of competitive advantage that could give it some staying power, I think it's just like anything else. The market cap for cryptos is, I don't even know what it is today. Maybe it's around, let's see. Coin market cap always has it up there. Was it 200 or 300 billion? Let's see. All right. So it's at 133 billion. That market cap couldn't go to, I mean, cryptos could replace stocks eventually. I mean, it's almost the same thing. One day we could have Amazon coin, Walmart coin, Target coin. You can buy all of them with Bitcoin, or you could buy them with JP Morgan coin. And all those coins are going to be basically replacements of stocks and, basically currencies that you can switch between, that you can trade one for another. So the potential is, $100 trillion. It could replace cash. You just never know. But so I think crypto has a lot of room, and it's not just going to be Bitcoin. Bitcoin is the granddaddy of them all, but I think everything in this list here, Litecoin, Tether, XRP, everything has potential. There's not just going to be one crypto. I think there's going to be billions and billions of dollars that pour into the space, and eventually it's going to be trillions and trillions of dollars of market cap. Cryptos are here to stay, and everything in the top 10 is going to be worth 100 times what it was worth now, eventually. So I don't think you really go wrong. The only way that I think you lose is if you pick a coin that has another coin that has better utility and does the exact same thing as that coin, and it doesn't have a moat, as Warren Buffett would say, some type of competitive advantage within its space that will protect it from being phased out. Like Bitcoin's old algorithm and its pure form, and it being the first, kind of makes it a little bit, I don't know, it was the word I'm looking for, immune to some of the competition, but it's the only one of its kind. So I don't think, but all the other ones, I think they're going to face competition for younger, better, faster versions of their coin. So you have to really pay attention to the fundamentals of the coin and why you should care. And as long as you pay attention to that, I think you'll be okay with any of the top coins. And then of course you'll always find, the ones that are going to go up 30% a day and 50% a day, just like small cap stocks and stuff like that. Ethereum, I like Ethereum. I mean, it's been around the whole time. And like I said, it's the basis for a lot of the other coins. It has a ton of utility. Their contract system, the ledger-based contracts is really smart. So yeah, I mean, I think Ethereum's great. I think in the long term, it's just like there's hundreds or thousands of stocks. I think it's going to work the same way with cryptos. And again, I think cryptos ultimately may replace the markets. Like think about how inefficient stock markets are. They've done some studies that the amount of actual shares that are available, there's some float in there that is not real. Like there's shares that people buy and sell every day that don't really exist. And it's on exchange, and there's not full transparency. And coins solve that. It's the exact same thing. Imagine if there was Target coin and Amazon coin and Google coin, and you just buy the coins and that represent a percentage of ownership in the company. It could be the same thing. You could do it on a blockchain, and the difference would be that it's infallible because it's on a blockchain. It's on a public ledger. It's perfect for stocks. And you wouldn't have multiple stocks being issued because the whole thing's digital and everyone has access to it, and there'd be confirmations and everything that goes into a blockchain. So we're not anywhere near there now. And of course, any type of changing of the guard like that is going to come with a tremendous amount of resistance. So it could take 30 years to transition that over. But I think cryptos are here to stay, and the technology underlying is going to be what powers the majority of the future financial back office of everything. So yeah, I think you can't really go wrong with any of them. And so think about Ethereum and where they fall into that scheme. If they're what a lot of the cryptos are being built on, and they're the second largest market cap wise, owning Ethereum right now with $139 is probably a smoking deal if you fast forward 10 years from now, right? So that's me guessing though, but that's just, my common sense guess. So I hope that answers the question. Anybody, any other charts you guys want to look at? All we had was Bitcoin and XRP. Any stock charts or commodities, currencies, anything? If you pick a stock, I probably already have the chart marked up because my list is continuously growing. It's growing pretty slow though. I mean, Boeing, McDonald's, and Federal Express are the last ones I've added over the last maybe month and a half. Yeah, Litecoin is, when I started this channel, we did a lot of crypto stuff because we were looking at some of the lending platforms and we tried them out just to see how it would work out. Epic failure on that. But during that time, it was interesting because I was so involved with Bitcoin and what was happening with it. I was looking at Coin Market Cap every day, and it's been interesting to watch Litecoin solidify itself as a top tier coin. But my problem with the coins is right now I don't know what the competitive advantage for one coin over the other is. Like Bitcoin, I know I heard about, but the rest of them I'm not really sure because I don't do enough research. So I don't want to give you bad information. But what I do think, again, is I think there's going to be billions upon billions of dollars that are going to flood into cryptos when the market starts to go south. And I think all the top cryptos are going to be the benefactors of that. So I don't think you can go wrong with any of them that have really good utility and that people are heavily invested in now. I think all of them should do pretty good. It's just my opinion, but that's what I think. Cannabis stock, I don't follow it. I don't have any on watch. If you give me a symbol number, I'll pull up any individual stock and take a look at it. I mean, cannabis is the same kind of deal as I think cryptos. I mean, it's a class of stock that's recently become legal. It's something that the world kind of wants, and we're making it available to them. So there's going to be heavy upside at the beginning, and then eventually they're going to weed themselves out for who's the really quality company and who's not. And so I'll look at any individual one if you give me a symbol number or a symbol ticker. I don't know of any off the top of my head. I have a friend that trades them, but I don't have any on my watch list. I like really large cap stocks because I'm planning for the future. As my account grows, I want to be able to trade the exact same format that I trade now, and without having to change much, no matter how large my account gets. So I like to stick with stocks that have a daily volume over 100 million shares or $100 million in trading. But I mean, I'll gladly look at any stock if you give me the ticker symbol. Just let me know. Oh, of course. That's what this is for. Anything you want to know that's worth anything to you, my opinion matters to you at all, I'm willing to share. And two heads are better than one too. When you're looking at these charts, it's always good to get a second perspective, and just to see if you think you're making sense or you're thinking the same as somebody else. A lot of confirmation is good sometimes. Okay. Aurora. With my Aurora. I don't see a ticker symbol. Aurora, is that AU? There we go. ACB. All right. So what's the daily trade volume here? Let me take a look. So it trades 57 million shares a day. That's pretty big. Well, that was today, but it's almost $500 million a day. It's pretty good. All right, let's take a look here. All right, so I mean, this is why it's always good to start with a bigger chart, a longer time frame chart, because you can kind of quickly see what's going on. So, price came out here. This is, what is this, 19 cents, and it's been as high as $12.53. Right. So we've reached a point where you put in a top, you retested that top, you had this bearish engulfing candle here. Polarity on the market is down. So I think it's going down. All right. So if you measure the entire move, I don't know if my fib ever started working again. And no, it didn't. Oh, that is very concerning. Let's see. Sorry, guys. 19 cents to $12.53. We're going to do this with a calculator. Haven't done that in a while. So $12.93 minus 19 cents. That's a $12.74 run. So you multiply that by 61.8. And that was wrong. Divide that by 61.8. Sorry about that. Let's try that again. Times 0.61.8. which will give us 787. So let's just round that off to $8. So we're gonna say that a retracement back to $4.80 ish. Is that right? $4. Something's really not right. Let's try this. There we go. Okay. We don't have to do it that way. Good old live video. You have to love it. All right, so $4.99 would represent about a 61% retracement. Let me see if I can get the ultimate low. All right, so $4.94. This range is typically where you see the bounce. You see the commonality in this? The market went up, made a high, tested that high, rejected, came down. Here's the 61% retracement level as we talked about. And what did you get? You get a reversal in price on a monthly level. So it looks like it's headed back up. Whether it's going to make a new high, I never really guessed to know that. What I like to do is determine what areas you're going to see resistance. So like, for example, let's say this was just the first leg of a downward move. So, you know, like a ABC, you know, like A, B, C, one of those kind of deals. So I don't know that that's the case because the polarity of the market's up, but I assume that that could happen. So what I like to do is I like to go into the chart and identify if I'm wrong about the direction, you know, where typically am I going to find out that I'm wrong, and I identify those areas. So when the price was on its way down, so before we even, and you can do this on all stocks on all time frames. So before price started to come down, let's just talk about when price was up here and it was retesting this high. We should have already had this area right here identified as an area that price could meet resistance or support if it came back down, because this is a really large run up and there's going to be people down here that want to buy it. Okay. So what happened was the price came down. We would have been looking to buy it in this range. That worked out pretty great. It went up. It tested the high, actually made a new high, but it couldn't sustain it. So now it's come back down and tested that line. Now you don't know whether or not long term price is going to continue to go down. That's more based on fundamentals, or if price is going to go up and make a new high. This, again, these are based more on fundamentals. This chart is a monthly chart. Each one of these is 1 month. So that doesn't really matter what you do intraday or day to day. If you're going to swing trade and be in your position for 3 days, your time horizon is so short, the overall direction of the market doesn't really matter. But it's good to know these zones so when you get there, you can trade them properly. So if I'm going to enter into a trade down here, I'm going to be aware that if I'm wrong about the long-term direction, there's going to be a ton of sellers here to sell. And I don't know that they're going to be there, but I have to be aware of this. So if I'm going to trade it, I want to buy it here and I want to be out before this part, because now I'm gambling, you know? So you're looking for a buy signal here. Now you have to zero it down to a time frame that's going to match the time horizon you're looking for. So price came down here the first time, touched this zone, and it reversed immediately. You see how that worked right there? It didn't even pull back. And then it went and made a new high. This time it's coming back again. I probably would have bought about right here. And actually it wouldn't have been there because I have rules. Because of this high right here, it would have been further back. So yeah, I would have won this trade too. I mean, I can't really get into the math of how I would have took the trade, but there would have been a buy somewhere in one of these 4 candles here with a target of about right here to get out. and then there would be a second position maybe if it comes back here to get in again. But the goal is to always get out before I get here, because who knows what the market's going to do. I don't know if it's going higher. I don't know if it's going lower. So this polarity on this market on a monthly level is still up, I believe. Let me go back and look. Yeah, polarity's still up on a monthly level. Let me confirm that. Yeah, polarity's still up, and it is concerning that we double topped here, but it didn't break polarity to the downside, and we had a reaction. So it's up, but I'd be weary of sellers here because we failed last time. We tried to make a new high, and we made it, but it immediately failed. So if I'm trading this within the week, I would have been looking for a buy here, looking for a buy here. I would have been looking for a sell in here the first time. Just been weary of it. You got your signal right there. It didn't pull back, so I wouldn't have been able to get into that trade, but it happened right here. And now it's in the middle of the range. So for me, it's untradeable unless you're going to day trade it. And if I had a bias during the day, it would be maybe like tomorrow to the downside, but overall further up. I think it's going to come back up and test this area. So that's what I think. What's the hourly chart look like? Yeah, it's pretty flat. It's got a ton of volume though. So, but that's my thoughts on that. So in trading, it's always good to identify high probability, not just where your targets. I found great success using my target exits to actually be exiting where I would find out if I was wrong. So it's not based on a greed component, and I want to make 3 times as much as I risk. You can say that on every trade and just never win a trade. So, excuse me, you could have a 3-to-1 risk reward ratio, but then have a 10% win rate. Because if you can aim for 3-to-1 all you want, but if you're always buying at the wrong spot with low risk to reward probability based on running into resistance or support, then it's just never going to work for you. So what works best is to identify zones like this area here, come up with rules to get into the trade, like, maybe on this blue candle here, after you reach this area, made a swing low, maybe draw a trend line here. There's a break probably happened right there on this candle that I'm pointing at. Let me zoom in a little further for you right here. And then maybe the trigger could have been to get in as the price was going back down on this candle. And I'm eyeballing all that, but I think that's how it actually plays out. So, you could kind of, find entry rules, and then you get in at an earlier spot, and you don't have to worry about this area here. You can get in and get a 2-to-1, 3-to-1 risk reward ratio, make your money on the small move, and get out of the trade. And it's much more predictable that way. And you want to avoid long-term support and resistance areas if you can. And you don't want to enter the trade in the middle of the zone, because the middle of the zone can be highly volatile and very unpredictable. The most predictable time is at support or resistance. Price reached this area here, bounced off of it, came back down, tested it, bounced off of it, came down and tested it, bounced off of it on a daily chart. And we would have had this area identified weeks before price ever came here. We identified the zone somewhere in here, and price didn't get there from, this is November, this is October. Price didn't even actually get to the zone until December. We had this level would have been on our chart for 2 months waiting for price to get there. And so you need patience in trading, and sometimes it helps to diversify across multiple asset classes and other charts so that it helps you be patient. That's why I watch 80-something stocks, because, I haven't traded the SPY. I traded it once in the last, I think, 3 or 4 months, because I'm just patient. But I don't have to trade it because I've got all these other stocks here on my list that I can trade, and some of them are going to set up so that you can wait for your class, your top quality setup, and wait for price to get to these support and resistance areas, and wait till you get confirmation to enter your trade per your rules. But you don't have to watch just one stock, because you might only trade that one stock 3 or 4 times a year if you're patient and do it the right way. So sometimes you can increase the number of things that you watch, especially when you get proficient at analyzing the chart quickly. So I know I kind of got off on a tangent there, but that's my feelings on Aurora, and just trading in general. Like, identify these key support and resistance areas and have a plan for when price gets there. Because everyone can tell you whatever they want to tell you. No one knows what the market's going to do. No one. So your job is to put probability on your side, and you do that by playing at the zones where the most participants are going to enter the market. Herd mentality is a real thing. Human beings, we react consistently the same way to certain stimulus. So support and resistance are areas where people are stimuli. These are the areas where people make their decisions. So if you study the chart long enough, what you can find is some patterns of what people tend to do at these areas, and then that puts the odds on your side. And that's the name of the game. No one knows what it's going to do. I can go through all of my charts here, and you would be amazed at how many charts adhere to the support and resistance areas that I draw months in advance. It's uncanny, And we'll look through a couple of them since no one's really giving me any charts to look at. We'll look at a couple of them, and it's unbelievable. And no, I don't have a course. No trading course. I am writing a book. It's going really, really slow, because I'm in the midst of trading all the time, and I have business outside the country, and I do other things. So it's kind of a labor of love deal, but eventually it'll finish, and I'll share it. But these let's see. And the zones are more so not hard. I think I made an example about this before. They're not hard like rules. They're more like areas where price should meet support or resistance or whatever. So like how this area pierced, it appears through support or resistance area and then turn. It's not a hard number. Like, it reaches this line and then it turns. It doesn't work that way all the time, but it's just zones where you should be careful. Now, all my lines, since we just changed months, all the lines are up to date. So price really shouldn't be near too many of my support resistance lines, because they change every week and every month. But some of them, like this one, we've reached this area on Northrop Grumman, monthly resistance, and we're seeing the turn. And then down here, there's support. So we'll see what happens when it gets there. But we've identified this area long before prices come there. And you see I had an entry right here to sell this at this price. And I did that on this candle here. So price never came up and got me into that trade. So I can actually delete that off of my chart, because I never got a chance to enter that trade. Now I have to recalculate my stop loss and my size and my entry level and everything, because price never came back and tested it for me. You guys remember the NVIDIA trade a couple weeks ago? Remember I bought here as the price crashed that day, and we said it was a head and shoulders pattern, shoulder, head, shoulder. We're at the neckline now, and I don't know if it's going to break and go up, or whether it's going to go sideways. This is why I exit my trade. I entered here, I got out here. I don't just hold it forever indefinitely, because it hasn't, where I exited right here, price is right back to where I exited at. So if I would have held this for over a month more now, I'd be at the exact same spot I was when I exited here. So I'd rather have that capital available to invest in another setup where I can make a 2-to-1 risk reward ratio and get the compounding effect going, as opposed to just buying and holding it. As far as trading platforms, I'm using TradingView, and I like it a lot. It's very good. So yeah, that's where I'm at with it. So if we don't have any more charts that you guys want me to take a look at, then we can go ahead and wrap this up. So I thank everybody that joined me tonight. I know we missed last week. I live in 2 different countries, and I travel between the two pretty frequently, and a lot more frequently lately. So whenever I do travel, it does throw a little bit of a monkey wrench in my video creation schedule, because what happens is when I arrive back at one of the other places, I have a ton of stuff waiting for me when I get there, and I'm playing catch up for several days, and it really wreaks havoc with my trading and making the videos. But I'm here for the long haul. It's just sometimes it may slow down on a week to week basis as I move around the countries. But no, I don't place my trades with TradingView. I use the paper trade account with TradingView to mirror my real trades, and because this is the charting software that I prefer. I have Thinkorswim, and I have 3 different brokers, live broker accounts. I have 3 different ones, but I like TradingView's trading software the best. So I opened the paper trade account here, and so since I use this as my charting software, any of my real trades, I mirror them on TradingView, so that as I'm looking at the charts, I can see what my actual trades are doing. It's perfect. Now I do know that IB Interactive Brokers, you can use them through TradingView, and I'm considering signing up with Interactive Brokers because they've got some advantages tech wise, and I like the people that founded them and what they were based on. So I'm thinking about doing an Interactive Brokers account and trying that with TradingView, and that would merge everything into one. And I would, want to see how that plays out. And I'm a swing trader, so I don't need really high velocity. I'm not doing high frequency trading, or I don't need hotkeys or anything like that, because I'm a swing trader that works off of a daily chart. So I can set my entries the day before, the morning of, or whatever. And as long as I get filled with good, limited amount of slippage, I'm happy. So I don't need anything lightning fast. So, and it's very intuitive and user friendly. So I'm seriously considering opening an Interactive Brokers account and using TradingView linked to that. So stay tuned. So if that's it, then we're going to go ahead and get out of here. It's been a long day. But like I said, I appreciate you guys coming out, and I will talk to you soon. We'll go live again next week. I don't know if I'm going to be in the country or out of the country next week. There's some pending scenarios going on, so stay tuned to know exactly what day we'll go live. Assuming that we can go live, because once we get past Wednesday or Thursday, I don't go live on Friday or Saturday. No one's going to tune into that, so we just skip it. If I end up traveling on a Wednesday, we'll probably have to skip the live session for that week. But I'll try not to travel on a Wednesday or Thursday so that we can go live. But we will do a weekend review video this weekend to see how everything turned out, and stay tuned for that. And yeah, I'll talk to you guys pretty soon. Have a good night.